Hey guys, welcome back. And today I just want to take you guys through the strategy I've been talking about this whole week, the red folder new strategy. And if you guys go back and watch my videos on Sunday, I said to everybody on YouTube or who listened to my video that this week, Wednesday and Thursday, is the only 2 days you should be in front of your computer to look for trades if you're going to use the strategy. I'm going to take you through the strategy and how I made a video yesterday. You can go look at it, and I'll obviously link in the description below the video, so you can go check it out. It's called the red folder strategy. It's simple, it's easy, and anybody can learn this thing. All right, so today we had PPI numbers coming out at 8:30, and you can see this big candle pushed up, made this nice wick there, and I am gonna mark out the wick. There's the wick, and the bottom of this candle, it made a little wick. What I did do is normally you would mark out that wick, but because I've been doing this for a long time and I trade this, I have marked out the liquidity that lines up with that wick, and it was these equal lows here, and it was right there. So if you remember the way this, or maybe those of you that don't know, the way you trade the strategy, you wait for it for the news to form that violent move up and down. So it takes out all the buyers and sellers and trap people that put their stops above there and below there to obviously go from the one side and then target the other side to stop every greedy person out who hold on to their shorts thinking that this will hold. So I've marked the top side out, and I said that's a target. That's a liquidity target. And maybe I must just say buy side over there. Then immediately, if this candle created a wick and consolidated in the middle, like yesterday, we would wait to see which one it's going to take first. Then we'll take the target the other side. Because this was a target, this was already taken immediately. So sell side. So that sell side's been taken. So what we need to do is we need to wait for setup, a buy entry to form down here somewhere to then target the buy side up here. So what I've done is I've marked out this, and I'll tell you guys now. Let me just put it down here. This fair value gap, and I'm just going to call it fair value gap, FVGs. So I've targeted this fair value gap, and the reason I did that, we took the target, the sell side out. We really ran hard down. There's a little bit of a fair value gap down here. I did not take it. I wanted to see some sort of displacement taking these swings out. It did exactly that. It came back and it pinned right in. So I took a trade there. Unfortunately, 3 candles later, it stopped me out. So that was a -1 trade. Then I thought, okay, no, that's fine. I'll just sit and wait. And then these lows start forming, and there's nothing that shows me aggressive moves. And then we saw this aggressive dump down, and I thought, okay, that could be the next setup. And what I've done is I waited, and I've marked out the next fair value gap. Now, anybody who looks at this would ask or would say, okay, Nielsen, why haven't you taken this fair value gap? The fact of the matter is we've run aggressively away from it, spiked through it. We didn't close hard through this high, and that's a liquidity pull on its own. So it spiked through it. It came down, and normally what you would do if this white candle was lower down here, you would have entered there. The minute you break or break through these highs, you move your stop to break even. And in this case, if I had taken this, I would have get stopped out at break even anyways. So with that said, I did not take this trade. Even if you took this trade, it would have cost you another, because you would have taken it at 50% or the box. You would have spiked out, and you would have get stopped out at some point in time. All right, say argument's sake, I took this trade and this trade. I did take this one. I did not take this one. I would have been -2. Then I marked out another sell side over here, because now we're creating low, lower low, maybe another low. And at this point in time, we created this, another fair value gap. But this time, this fair value gap, and these are all FVGs because it got inverted, right? Except this one. But I wasn't looking to go short. I'm only looking for buys. Okay, so here we go, and we displace up. we didn't take this high out yet, and it came down, and I entered here, and I've put another order at a 50%. I only got picked up once, and when we came down here, I thought that I'm going to get it there. I didn't get it, so I was in for one on the line, and then I added another to here, and sure enough, I kept on to that trade, and as you can see, we're coming down hard. And what did we do? Like the strategies say, if we run the one side, we will target or should target the other side, because that is where liquidity sits. Now you can see people that were short here was happy. This was a OTE entry for people to short again, and they were all happy and they were holding on to these things, and now it stopped them out for those people that were greedy. And now some people might have think this swing low to that's a buy, and now you get stopped out again. But in our strategy, we just target the one low to the other low. We managed to, even if we took 2 losses, this on its own would have given you I don't know, 3, easy 5, 6 to 1, 7 to 1 at this trade. So you would have made those losses back regardless, and you would have ended up making money. On this trade, I've lost $300. I didn't take that, say that was another $300, but on this trade up here, I made just over $4,000. So that is how the strategy goes, people. And I promise you, if we look at the calendar for any red folder news going forward, do the same, exercise it, paper trade, journal it, and see how our price behaves. This was obviously aggressive, up and down, shaking people out. People, if you don't know what you're doing here, you're gonna buy, you're gonna sell, you're gonna buy, you're gonna sell, and at this point you're gonna be like, I don't know where we are. And the other thing that's important, so you make lower lows, that's all liquidity. And at the same time, when you have this buy side resting up here, or this target, there's something else that also stands out. If you really look at people trading trend lines, that's a liquidity pull up there, and all of these lower highs, that creates liquidity on its own. So when you get an opportunity to take a trade, I mean, even if you miss this trade, let's see if you could have done this. I'm sure that's below 50%, and that's in discount. All of these things are on discount. If you take the range like I did yesterday, I mean, if you really look at it, it's all of these are in discount. Nothing is, buy signals up here. And there's, some scalp trades that you could have taken, like this one here, that, that candle spike into that black candle to take it up to there. But guys, girls, this is the actual strategy again, and I think this was not cherry pick trades. I said to you guys, I explained the strategy, the highs and the red folder news on Sunday. I said, don't worry about Monday and Tuesday. Come to the charts on Wednesday and Thursday around this time. Let it play out. Wait for the market out, and see what it does. Whichever side it takes first, look for nice entries, whatever your entry model is. And if you don't have an entry model, please drop your comments below, and I'll gladly share videos with you on what a good entry model is and high probability entry models. And if there's a specific entry model that you're not sure of, I will also, consider whatever you guys reaching out to me, and if there's any validity on that, I can make a video on that to explain what you could have done. Yeah, there's some easy entries that you could have taken here. Even if you took 2 losses, you would have ended up making a good profit out of this. And that's all you do. You just have to stick to the model and stick to the strategy and stick to the plan, and manage your risk, and that's it. And you don't have to go out, risk your whole account on this, because this is not 100%. This may well have dropped down and only come for this target, I don't know, a week later. So I hope you guys enjoyed the video. If you find any value here, give it a like, subscribe, and share it with your friends, and see if we can build this channel. And I'll obviously do more. And once we've got more, enough people, I will start do these setups live, and then you can benefit and learn as we go live through these trading cycles. All right, with that said, I'm going to lock off now, and I'll see if there's anything in PM just to scalp. But for this is the strategy. You can walk away, go on with your life, and not worry about any further trades. Take care, guys, and speak to you later or on the weekend.